Hello, I'm Dr. Sandra Lang, Chair of the School of Business, and I teach accounting. I am a CPA and a CFE. A CFE is a Certified Fraud Examiner, and that's our topic for today, which is internal controls for small business. There's a lot of information out there for the large businesses, and all the textbooks talk about things you can do to prevent fraud and have internal controls in your business, but the small business doesn't have that option a lot of times. With the economy like it is, many people feel pressured financially, and those that have maybe wouldn't commit fraud in normal circumstances feel justified in doing it in these tight times. And the small business is especially vulnerable for several reasons. One is the amount of trust you have in your employees, and the other is the fact that you can't have internal controls in place, the formal ones. The main one they suggest is separation or segregation of duties. Well, if you have a one-person office staff, that's a little hard to do. Some instances lately, just in the news this week, there was $800,000 that a woman took from a credit union. Last week there was one of over $1 million. And in the small businesses, there's been a drugstore, not one of the chains, an independent drugstore lost $40,000, over $45,000, to a woman who was retired and came back to work. She had spending problems. So it can happen to anyone at any time. And so some of the things that you can do as an employer is just check things more carefully. Open the bank statement yourself. If it's an online, go in and check it, but make sure your employee knows you're doing it. So that's one thing. One of the other things you can do is ask your employee for a list of vendors. Then check that list of vendors to see if the address is the same for several different vendors, because that's what happens. They create a business and create the invoices, and you approve them, and then they pay it, and check goes to them. So you check to see if it's the same address. Some employees have been foolish enough to use their home address. So, a lot of times with fraud, it's very unsophisticated in the small business because it's an individual doing it, so they can be found. But they can also be prevented just by letting the employee know you are looking. So that's another thing. You can do something as simple as if you have teenage children, have them come in and have them observe for a day, just because you want them to know what's going on. That creates a tension that the staff has to be more careful. Have them observe the petty cash for 2-3 months, and then have them do the petty cash reconciliation. It's amazing how much cash goes through a business through a petty cash that can be walked off with. So these are things you can do. If you have more than one person in your office, you can do the separation of duties. You can have one person, again, it can be just your teenage child or your spouse, come in and one day a week, but they can write down on the envelopes, and on the list, the name of the person that the mail came from for each individual. Somebody else should open it and list the checks. Somebody else should make the deposit. So it depends on the size of your office. You can't tell how much you're saving, you can't be sure you're preventing fraud, but you know you're not encouraging it by taking these steps. Thank you.